Hello guys, welcome to my YouTube channel. This is Karthik. I'm going to talk about how Amazon makes money and what all things we need to know about that. Amazon is an e-commerce giant. They make most of their revenue from Amazon.com. Apart from this, they make revenue from other sources. Let's see what are they. Amazon plans to invest nearly $100 billion in 2025. Is Amazon overspending than anyone? So they're spending for capex. What it means? It's capital expenditure. It refers to the fund a company spends to acquire, maintain, or to buy physical assets like buildings, equipments, or technologies, etc. In this chart, Amazon is spending nearly $100 billion, that is higher than the last year, and also it's higher than the other tech giants like Alphabet, Microsoft, and Meta. So this can affect a stock price in the short term, and depending on how Amazon spending this money, it may gain in longer term. So definitely it's going to affect the Amazon balance sheet in the short term. Just look companies buyback and dividends, except Amazon. Other tech giants were buy back their shares and give a dividend to their shareholders. CEO Andy Jassy thinks AI is the biggest opportunity of this decade. He thinks all application used today is reinvented by the AI. That's the reason they were spending nearly 100 billion for the capex. Today we are going to deep dive into their recent earnings calls, AWS revenues and tech stacks and competition between Shane and Tim. In Amazon Q4 income statement, 40% of revenue came from online sales and 25% of revenue from third-party commissions. AWS added nearly 15% of its revenue. Other revenues are from physical stores and subscriptions from Prime Videos. Overall revenue grew nearly 10% of year over year with $188 billion. EPS looks good, nearly 1.86 and did beat earnings. Net profit is $20 billion, that is 4% of year over year. In terms of Q1 guidance, the expected was nearly 158 billion revenue, but actually they gave a guidance for 153. And the operating income for 14 billion and it expected was nearly 18 billion. After this, stock corrected for 5% of its earnings. The investors were not happy with their Q1 guidance as well as their nearly 100 billion spending on the capex. This could have corrected the stock in the short term. If you are a long-term investor, you can buy this dip and you can keep accumulating your shares. AWS growth was steady. Its revenue grew nearly 19% year over year. As of now, supply chain and power limitations are there, but it is expected to ease out in Q2. Let's talk about AWS market share and margin. It grew nearly 22% year over year with 91 billion. AWS had a commanding 30% market share compared to Azure and Google. Some other fast-growing two-tier cloud infra providers are Coreware, Oracle, Snowflake, Cloudflare, and Databricks. AWS operating margin improved by 7 percentage points to 37%, and AWS generated $40 billion in operating income, that is 58% of total. It's looking good. Let's talk about Amazon AI. There are three layers: infrastructure, models, applications. Amazon is doubling down on AI infrastructure with custom chips. Nitro and Graviton in its core business, and Trinium for training and Infernitia for inference are the key pillars. Jassy highlighted that Trinium 2 rollout emphasizing its 30 to 40% better price comparable to GPU instance. As of now, Amazon is in deep partnership with the Nvidia for AI, and also they are developing their in-house silicon strategies. In the model layer, Bedrock is the Amazon's LLM as a service. Other models are Luma AI, DeepSeek R1, Amazon own model family Nova. So Bedrock is rolling out a cost-saving features to make AI adoption more affordable. That includes prompt casting and intelligent prompt routing. Amazon is building AI-powered application for their productivity. Amazon Q is a Gen AI assistant, Rufus for shopping assistant, Alexa AI for Alexa, Enterprise AI for AI-powered cloud solutions. Key quotes from the earnings call. Advertising is a crucial growth revenue for Amazon. On CapEx is a bullish sign for upcoming quarter. On AWS capacity, the supply chain will be eased out in upcoming quarter. On DeepSeek, he said the cost is meaningfully coming down and it make much easier for companies to be able to infuse all their applications. Amazon vs Chinese e-commerce. Tariffs are back in spotlight. But there are some loopholes like de minimis exemption that allows export under $800 billion to bypass US tariffs. It's an added advantage for Chinese e-commerce, but last week Trump initially eliminated this de minimis exemption. In last fall, Amazon offered a ultra low priced product Amazon Howl to compete with Shein and Temu. Let's see how it goes in the upcoming quarter. Till then, the tariffs confusion and others are going to be remain forever until this entire thing sort out. Amazon is getting some good ad business because of they recently they asked to convert all the Prime members to the ad supported tier. That's adding in more revenue to the business. The Prime Video has captured nearly 4% of US TV time. Apart from that, Amazon multipurpose membership is a ultimate churn migrated compared to the Netflix. So in short term, there are some headwinds are there because of these tariffs and other issues. In long term, it's looking bullish. So keep invested in this. Until then, thank you for watching this video. We'll see you in the next video. Keep supported by subscribing to my YouTube channel. Thank you.